Hi everyone, welcome back. We are going to do a past exam question paper of P6. If you could open your BPP exam kits please and come to question number 23 of your BPP exam kit. Question number 23 and name is Opus Limited Group. Now it was examined in June 2014 and it's a 25 mark question. Question name is Opus Limited Group, examined in June 2014. If you have any other exam kit, just open up this question please. Right then, if we read the requirements now, it's first of all it says carry out the work required as set out in the email from your manager. The following marks are available. Now first of all it says relieving the trading losses of Accio Limited and Ribe Limited. So that's part A. In part B it says sale of the shares, and in part C it says error in corporation tax return of Bini Limited. Now when I look at all of these requirements, and when I look at especially the requirement number C, to me it looks so easy because it says error in the corporation tax return of Bini Limited, which tells me a little about ethical questions which I told you. As I said that there will be one question on ethics, one part of the question on ethics, and it has been examined in almost every sitting, and it's very easy. Now it looks to me it is something like that when it says error in the corporation tax return of Bini Limited. Now if we read the email from our manager on the previous page, it says part C, error in corporation tax return of Bini Limited. A detailed review of the results of Bini Limited for the year ended 31st of March 2016 has revealed, for the which tax year? 31st of May 2016. Has revealed that no adjustment was made in respect of an amount of disallowed expenditure. As a result of this, the company's corporation tax liability for the year was understated by £8,660. I have told the company that there may be interest and penalties in respect of this error. Now explain how the interest on the underpaid tax will be calculated, and state the matters which would need to be disclosed, which would need to be considered if the company were unwilling to disclose the error to HM Revenue and Custom. Now this the year end is 31st of May 2016. Now if we read the full question, you haven't read the full question, have you? You haven't read the full question. If you come to page number 33 of your BPP exam kit, where the question starts, where the group structures are given, just beneath that, holding in other companies. Now it says all companies are UK resident trading companies, and number 2 it says all the companies including Bini Limited have always paid corporation tax by installment. Now when it's telling me that all companies pay by installment, what does it mean? It means that all companies are large companies, and large companies we know are required to pay by installments. And when they are required to pay by installments, we know there will be four installments, right? So the year end is 31st of May 2016. Now the first installment will be paid on 7th of the month in the accounting period. So 7th of month is 7th month is December 2015. So first installment will be paid on 14th of December 2015. Now if you haven't paid by that date, now HMRC will charge interest from that date, and we know that interest will be at the rate of 2.75% because it is underpaid, right? So first interest would be charged on that date, and there will be penalty as well because we are not paying and we are paying late, and penalties as well we have seen in our self-assessment chapter for the companies. So there will be penalty, first penalty on that date, which will be December, and on second installment as well, which will be 3 months after that, and another installment as well, and the fourth installment as well. So there will be, HMRC will be charging penalties. Now we have to communicate that to the client that you will be paying penalties if HMRC knew about that, and you cannot hide this 8,660. So if it is disallowed expenses, then you must state them, and which has eventually reduced the corporation tax liability by 8,660, which you must pay to HM Revenue Customs. If you do not pay that to HM Revenue Customs, it may be regarded as tax evasion, which is a criminal offence, and we are, as a chartered accountant, required to report criminal offences, required to report the money laundering offences to the money laundering reporting officer if there is one in our firm. If there isn't any in our firm, then we'll have to report that to National Crime Agency. And even And then after that as well, we will have to tell our client that if you do not agree to disclose that to HMRC, we can do that on your behalf if you let us do that. And if you still do not agree that you do not want to disclose that to HMRC, you do not want to pay that to HMRC, then we will have no option other than to cease acting for you as your tax advisors. And when we cease acting for you as your tax advisor, we will also tell HMRC that we are no longer representing you as your tax advisors. However, we will not tell them the reasons why we have ceased acting for you. Although we will not tell them the reasons, but HMRC will still get it, that HMRC will know it, that why we have stopped acting for you all of a sudden, right? So they might start investigation against you. And as an accountant, we cannot represent a client who is deceiving and who is playing up with the rule, because it is against our profession, and our profession requires us to act professionally and with integrity, and it is against our code of ethics. So you will have to write the answers like that, as we have seen in one of the previous questions as well, which I have told you. All right, so we have done the question C. Part C of this question, so that was so easy. Right, so if we look at the requirement A now, so we have done the requirement C anyway, so let's read the requirement A. It says, relieving the trading losses of the Acqua Limited and Ribe Limited, and in part B it says, sale of shares in Veneer Limited. Now if we come to the first page where the question starts, it says, it has given us the information about a schedule of information of how this group works. So Opus Limited is the parent company which holds 100% in Acqua Limited, 80% in Ribe Limited, Veneer Limited 5%, Bini Limited 100%, and then Ribe Limited owns 85% in the Lido Limited as well. Now for the taxable total profit for the corporation tax group relief purposes, which companies are within the corporation tax group? Now Opus Limited, Acqua Limited, Ribe Limited, and Bini Limited are within the group. How? Because Opus Limited owned more than 75% of Acqua Limited, more than 75% in Ribe Limited and Bini Limited as well. However, in Veneer Limited, it only owns 5%, so it is not in the group. And Lido Limited is owned by Ribe Limited, and if we see the effective interest, it is less than 75%. How can we see the effective interest? We'll have to multiply 80% to 85% so that we can know the effective interest of Opus Limited in Lido Limited. If the effective interest is 75%, that will be within the corporation tax group. However, if it is less than 75%, it will not be within the group. Now that was our corporation tax group. Now if we look at the capital gains tax group, now capital gains tax group means that at each level there will be 75% shareholding, and the effective interest of the top company would be 50%. Now if we look at the capital gains tax group, now in capital gains tax group would be exactly same like we have seen earlier, but the Lido Limited will also be within the capital gains group. Now how would the Lido Limited be in the capital gains group? Because there is the 75% shareholding of more than 75% shareholding of Ribe Limited in Lido Limited, and also the effective interest is more than 50%, so that would be in capital gains group. And what is the benefit of the capital gains group? That capital gains and capital losses can be transferred within the companies, right? Excuse me. The Veneer Limited, the Veneer Limited will not be within the group and within any group, because it is only 5% shareholding anyway. Now the results for the period ended 31st of March 2018 are given below. Now Opus Limited had trading profit of 10,000 and property income of 8,000. Acqua Limited 93,000 pounds of loss and chargeable gains of 6,000 pounds. Ribe Limited had profit as well, and Lido Limited, Veneer Limited, and Bini Limited. And then there was a chargeable gain of Lido Limited as well, 21,000 pounds. Now this is a chargeable gain. It is not a loss. There is a misprint here. It looks like it is a loss, but if there would have been a loss, then there would be chargeable gain / the chargeable loss, capital loss. But there isn't any capital loss, so it is a capital gain, chargeable gain. Now just beneath that there is a notes, holding in other companies. All of the companies are UK resident trading companies, and all of the companies including Bini Limited have always paid the corporation tax by installment, which tell me that all of them are large companies. Coming on the next page, it says Opus Limited acquisition of holding in other companies. Now Opus Limited had acquired Acqua Limited and the shareholding in Ribe Limited. Now he acquired Acqua Limited and Ribe Limited along with the shareholding in Lido Limited, on 1st of January 2003. So it was acquired long time ago. Veneer Limited has an issued share capital of 1 million ordinary shares. Now, which is Veneer Limited? Look at the structure. Veneer Limited, currently we hold 5% only. Now, this company has issued share capital of 1 million. Now, Opus Limited acquired 170,000 shares in Veneer Limited on 1st of July 2008. So the 17% shareholding, it is 17% shareholding, isn't it? 170,000 divided by 1 million total shares, it is 17% shareholding. So 17% shareholding was acquired for £65,000 on 1st of July 2008. It sold 120,000 of these shares on 1st of October 2017 for £150,000. So out of £170,000 shares, £120,000 share, sorry, out of 170,000 shares, 120,000 shares are sold, which means only 50,000 shares are remaining, and 50,000 shares means 5% shareholding, which is disclosed to us in the group structure on the first page. All right, so there is only 5% shareholding. Now, it sold 120,000 shares on 1st of October 2017 for £150,000. Assume the indexation factor from July 2008 to October 2017 is 0.261. Now, if you could remind me, what was substantial shareholding exemption? Could you please remind me? We have studied substantial shareholding exemption. When one trading company owns more than 10% shareholding in another trading company in the previous 12 months out of the last 24 months, then if that company has sold the shares, now that will be exempt. There will be no capital gains on that. All right. So when one trading company owns 10% shareholding in another trading company, now are these trading companies? Yes, indeed, they are trading companies. All of them are trading companies. Now, Opus Limited, did it hold more than 10%? Yes, it hold more than 10% because there was 17% shareholding. Now, did it hold more than 12 months in the previous 24 months? Exactly, the ownership was more than 12 months in the previous 24 months, if we see, because it was acquired in 2008, long ago, and it sold in 2017. Now it had 17% shareholding. Now its holding is only 5%, but it had more than 10% for a consecutive 12 months in the previous 24 months, which tells me that for the capital gains tax purposes, there won't be any capital gains tax on that, and it will be exempt under the substantial shareholding exemption, right? And just beneath that it says Opus Limited acquired Bini Limited on 1st of December 2017. Now Bini Limited, if we look at the group structure, Bini Limited is part of our taxable group and also the capital gains group. However, it was acquired on 1st of December 2017. Now our accounting period, for our corporation tax period is ending on 31st of March 2018, which means that Bini Limited was only acquired for how many months? December, January, February, March. So there were only 4 months which are relevant to our current period. Why? Because as I said earlier as well, while we were reading the notes in our previous lecture, that only the corresponding period losses can be set off. Now this company was acquired on 1st of December 2017, just 4 months before the end of our current accounting period, which is ending on 31st of March 2018. So only 4 months worth of losses can be set off against profits of this period, a profit of the Bini Limited, right? And after that it says minority shareholding in Raib Limited and Lido Limited are owned by individuals, right? So minority shareholding in Raib Limited and Lido Limited is owned by the individual, so that information is not relevant. After that it says Veneer Limited is 75% subsidiary of Jara Limited, a company with no connection to Opus Limited. Now it says Veneer Limited. Now Veneer Limited, we only own 5% in Veneer Limited because we have already sold the shares. We held 17% shareholding, but we only hold 5% now. Now it says the remaining, this company is a subsidiary, 75% subsidiary of another company. Now if it would not have said that it is a subsidiary of another company, now what rule would apply in the absence of that? Now if you read that, it is a 5% shareholding Veneer Limited, and we have just studied the rule of consortium, if you remember, right? So So Veneer Limited is a 75% subsidiary of other company, which means that it is not a consortium. Now, if it would have been consortium means that 75% percentage is owned by the other companies, and every company owns more than 5%. But unless if it is a subsidiary of other company, it will not be as consortium. All right, so it is not a consortium; it is a subsidiary of other company. And just beneath that it says results for the period ended 31st of March 2018. All of the companies with the exception of Bini Limited have prepared its account to 31st of March 2018. And we know about Bini Limited anyway. Bini Limited has prepared accounts to 10 months ending 31st of March 2018. Bini Limited has prepared accounts 10 months to 31st of March 2018. Alright, and it was acquired on 1st of December 2017, which tells me another thing as well, that only 4 months are relevant in our current period, and its accounts are 10 months long as well. So whenever we are setting off the loss, we'll take 4/10, not 4/12, because its accounts are only 10 months long, and we have only acquired it in December 2017, which means that we will have to take only 4/10. Right, and then it says where necessary, the results shown above have been adjusted for tax purposes. Acco Limited had trading losses, including writing down allowance in the main pool of £35,000. Now, if you come to the first page, Acco Limited has a loss of £93,000. Right, so £93,000 is loss, and out of this £93,000 loss, the capital allowance was claimed of how much? £35,000 was capital allowance claimed. Now, if the capital allowance would not have been claimed, the loss would have been less, 35,000 less. All right, because we know that capital allowance reduces the gain, but it increases the loss. Acco Limited is not expected to return to profitability for a number of years. Now, that is very important as well, that she had a loss of £93,000. Acco Limited has a loss of £93,000 in current period. Now, say for example, if we set off against current period profit, which is £6,000 chargeable gain, and we set off against chargeable gain of other company as well, assuming it is part of the group, and the remaining loss against other group companies as well. Say for example, if there is still anything left out of that, which is unrelieved loss, right? If there is unrelieved loss, that will be carried forward in the future year. But please remember that loss carried forward in the future year cannot be set off against other group companies. Only that can be set off against the period of the only that can be set off against its own profits in the future period. However, this company, it says in the question that this Acco Limited is not expected to have profits in the future periods, which tells me that if there is any unrelieved loss, then it is just lost, because in the future periods we are not expecting to have the profit anyway. All right. Now, in that case as well, now we'll have to see that if there is any unrelieved loss in this question or not. If there is any unrelieved loss, then we might start to think that we should not claim the capital allowance in the current period. All right. Now, listen to me carefully. Now, say for example, in the current period, the loss is £93,000. Now, if we would not claim the capital allowance, what would happen? If we would not claim the capital allowance, it means the value of the asset would be increased. Right? We are calculating the capital allowance on the plant and machinery, aren't we? Now, when we do not claim the capital allowance, then the asset value, the plant and machinery value, would be increased. Now, at the end of the year, that would be carried forward in the future year. Now, if we do not claim the capital allowance in the current period, we can claim in the future period anyway. Now, when we claim in the future period, it means that we still have an option to reduce our profit in the future period to the low. We can reduce our profit in the future periods. All right. Now, if we can reduce our profit, of course we can increase our losses as well in the future period. Now, if we increase our profit in the future periods, now that can be set off against group relief purposes as well. All right. However, in this case, it cannot be set off against the group relief purposes, because it is unrelieved loss and it will be carried forward. If the loss is carried forward, that cannot be set off against group relief purposes. And because this company is not expected to have profit in the future period, so there is no benefit of carrying it forward. All right, that is just an assumption. We do not know yet that whether there will be whether this £93,000 will be fully relieved against other group companies, or there will be any unrelieved. We still do not know it. I was just telling you. Right now, after that, if we see in the question, where were we? Just bear me 1 second. Where necessary, the results are shown, and Accu Limited is not expected to have returned to the profitably for the number of years. So after reading this note, that's why I explained you everything in much detail. Now Rive Limited has a trading loss brought forward of £68,000 on 1st of April 2017. Now Rive Limited, if we look at the Rive Limited, now Rive Limited had profit of £41,000. Now it had carried forward loss of how much? £68,000. Now this £68,000 can be set off against its current period's profit, but the remaining loss will be wasted because it cannot be relieved against group companies. As I was explaining earlier, that loss carried forward cannot be set off against group relief purposes, but loss carried forward can only be set off against its own profits of the future period. Alright, so the Rive Limited profit of £41,000 can be set off against loss of £68,000, which would reduce its current period profit, so there will be no tax to pay for the Rive Limited. Right? Now, after that, the email from our manager relieving the trading loss of Accu Limited and Rive Limited. The objective of the group is to relieve the losses as soon as possible. So that is the objective, to relieve the loss as soon as possible, so there is no carrying forward in the future periods. Prepare calculation together with the supporting calculation to show how the group's objective can best be achieved, clearly identifying any losses to be carried forward on 31st of March 2018 and any further information which may need to be obtained. There may be some interesting planning possibilities here. You should think carefully about the tax position of each company. Alright, so I've already told you enough about this part A of this requirement. I've already explained on every note we have read. I've already told you enough. Alright, so now by looking at this group structure, if you come to page number 1, where the question starts, page number 33, sorry, where the question starts. Now if you look at this group structure again, now Accu Limited has had a loss of £93,000. Now, which is when we look at the corporation tax group companies. Now, which companies are in the corporation tax group companies? All the companies are within the corporation tax group companies, except for Veneer Limited and Lido Limited. And Bini Limited, we can only set off the loss for 4 months out of the 10 months. All right, we cannot set off the full loss because it has just been acquired on 1st of December. Alright, and it's preparing its account 10 months ending 31st of March, which means it only had 10 months long accounting period. We can only set off 4 months out of the 10 months. Right, and the rest of the companies are within the group except Veneer Limited and Lido Limited. Now, if we look at this £93,000 loss, and we also see that there is a chargeable gain in this company as well. There is other chargeable gain of Lido Limited of £21,000. Now, let's see that if Lido Limited and Accu Limited are within the capital gain group or not. Now, Lido Limited and which company? Accu Limited. Yes, they are within the capital gain group, as I said earlier as well. If we look at the capital gain group, Oppo Limited, Accu Limited, Rive Limited, Bini Limited, Lido Limited, all of them are within capital gain group, which means that the capital gain of Lido Limited of £21,000 can be transferred to Accu Limited, can also be transferred to Opus Limited, can also be transferred to Bini Limited as well. Alright, so there are different possibilities, but if we just set off, because the loss is for Accu Limited, if we just transfer this 21,000 to Accu Limited, then in Accu Limited total capital gain would be £21,000 which was transferred and £6,000. So the total capital gain, total chargeable gain for Accu Limited would be £27,000. Now that £27,000 can be set off against the trading profit. Now whatever the remaining the loss is, that can be set off against Opus Limited as well, because Opus Limited is also part of the group. All right. Now Rive Limited profit was already set off against its own carry forward losses anyway. Now whatever the remaining loss is, what about the Lido Limited? Now Lido Limited is not part of the group anyway, so we cannot set off the remaining taxable total profit. We cannot set off the remaining trading loss of the company against Lido Limited, because Lido Limited is not part of the group. What about the Veneer Limited? Veneer Limited is also not part of the group. Yes, the remaining loss can be set off against Bini Limited, but only up to the extent of 2/10. Right, so we'll have to see how much is the profit of the Bini Limited. Bini Limited has 78,000 profit. We'll have to multiply by, we'll have to take the £78,000 times 4/10. So £78,000 times 4/10. So whatever the amount is, we'll have to see that. And also £93,000 loss we'll have to take 4 months out of that as well. So 4 months times 12. So 93,000 times 4 over 12. So whatever is lower of these two, 93,000 times 4 over 12 and 78,000 times 4 over 10, whatever is lower of these two, that amount can be set off against the remaining loss of AccountancyTube Limited. Now, after doing that, if there is anything still left, as I said to you earlier as well, then in this case there would be something left. There would be unrelieved loss as well in this case. Now we'll have to see how much is the unrelieved loss, and whatever the amount of unrelieved loss is, we can go back to our capital allowances and unclaim the capital allowance. So we will not be claiming capital allowance up to that amount, so that the unrelieved loss would be zero, because because there is no point of carrying forward this unrelieved loss, because in the future period the which company, the AccountancyTube Limited, is not expected to have profit in the future periods anyway. Alright, so it's pointless to carry forward, and the carry forward loss can be set off against cannot be set off against the group relief purposes. Right, so I've already talked a lot about it. Now just do this question, think about all different possibilities for all of these companies, and keep the notes in front of you as well, and just write it down. All right, so just do the calculations as well and write it down. So how would we start? We'll write down loss of the AccountancyTube Limited, £93,000. Now that £93,000 can be set off against £6,000 of its own capital gains. Then the 21,000 transferred to it from other company, so that will be set off as well. Whatever the remaining amount is, then we'll have to see the group relief. Now in group relief, we will set off against Opus Limited first, which is 10,000 plus 8,000, £18,000. We'll set off that as well, and whatever the remaining is, we'll have to see the Rive Limited. Rive Limited, we cannot do that because it will be set off against its carry forward losses. Then Lido Limited is not part of the corporation tax group. Then Veneer Limited is also not part of the group. Bini Limited is part of the group, but we the loss set off against them will be limited to lower of two things: lower of Bini Limited's own profit, which is £78,000 times 4 over 10, and the loss £93,000 times 4 over 12. So whatever the lower of these two is, that amount will be relieved against, that amount will also be relieved. Alright, and even after deducting that, if there is anything still left, which is unrelieved loss of AccountancyTube Limited, and now that cannot be set off, that will be carried forward in the future year, and in the future year the company is not expecting to have profit, which means it will be wasted, because carry forward loss cannot be set off against the group relief purposes. Right, so anyways, so that was our part A as well. So that is how many marks? 14 marks for this part. So you'll have to do the calculations. Also you'll have to do the commentary as well, which I was telling you, and you will also incorporate the substantial shareholding exemption in this case. Now in the part B, it says, if you read just before the email from your manager, in the part 3, Opus Limited, now he acquired how many shares? He acquired 170,000 shares for how much? £65,000, and the remaining shares are 50,000 shares. Right, now read this email from our manager where it says part B, sale of shares in Veneer Limited. Now the Opus Limited has received an offer of £80,000 of the remaining shares of 50,000 ordinary shares in Veneer Limited. If the sale was to go ahead, it would take place on 30th of June 2018. Now sale would be on 30th of June 2018. However, the management of Opus Limited are of the opinion that the results of Veneer Limited for the year ended 31st of March 2019 will be such that the shares could be worth as much as £100,000 if sale were to be delayed until 30th of April 2019. Now the offer of them 50,000 remaining shares in Veneer Limited is how much? £80,000. So customer is willing to pay us £80,000 for our remaining 50,000 shares. Right, so that is now. Now if we delay it, then it would be £100,000. Now it says that set out the matters which management of Opus Limited should consider in order to decide on which of the two dates it would be more financially advantageous to sell the shares in Veneer Limited. When calculating the indexation allowance, use approximate indexation factor of 0.40 from the period from 1st of July 2018 until the date of sale. So the indexation factor is also given. Now there are two possibilities. One is to sell now, what would be the impact, and one is to sell after 1 year. Now Veneer Limited is a trading company, and the parent company is also a trading company, which is Opus Limited. Now when one trading company owns 10% or more sharing in another trading company, and the ownership has been for the 12 months in the previous 24 months, then there will be substantial shareholding exemption. Now if the sale is to be carried forward on 30th of June 2018, now if we look previous 24 months, the ownership was more than 10% and it has been owned for more than 12 months. Now the substantial shareholding exemption will apply if we sell on 30th of June 2018. All right, so the 80,000 pounds amount, which is the sales proceeds, so we will not have to pay any tax on that. So now the requirement in this, it says a sale of the, so there will not be any tax on 80,000 pounds anyway. So we'll have to just state that whatever the proceeds are, so we will not have to pay any tax on that because it is exempt under the substantial shareholding exemption. Now on the second date, if we sell on 30th of April 2019, now the proceeds would be 100,000 pounds. So we'll take sales proceeds 100,000 pounds less cost. Now how much was the total cost? Total cost was 65,000 pounds when we first purchased, and total shares was 170,000 shares. So 65,000 divided by 100,000, 65,000, which is a cost, divided by 170,000 pounds. 60,000 is a cost divided by 170,000 shares. So it will give me the share per price, the price per share. Then I will have to multiply by 50,000 shares so that I can get the price of the 50,000 shares. So that will be deducted out of the sales proceeds, whatever the remaining amount is. On that we will have to apply the indexation factor as well. So now we'll have to take the cost, whatever the cost we have calculated, multiply by the indexation factor, whatever the remaining amount is. That will be our that will be our capital gain. On that we will have to pay corporation tax at the rate of 19%. Right? Right then, so that's it for our this video lecture. I've just gone through this question number 23, which was a huge question. I think I've explained everything in as much detail as I could. Now what you have to do is, your job is to just do this question yourself, please. And if you have any problem, just drop me an email. But please make sure after doing that question, think carefully, read the question carefully, and think about every step. Think about why this information is given to me in the question, and then try answering it. Do the calculations as well, and then do the commentary as well. And if you are stuck anywhere, just look at the answers from the back side of the BPP exam kit. They're quite comprehensive answers in much detail as well. So I hope them will be helpful. If you still have any problem, just drop me an email. I will try and answer. I will see you in the next video then. Goodbye.